It has been roughly 6 months since I last did a full-on cover call ETF ALLSTAR tracker video looking at the various yield changes, distribution changes month over month, performance data. This is typically a fairly data heavy video, but the thing that I've always wanted to do with this is to allow all of you to have access to it so you can do your own research. I've alluded to it, especially if you're new to the channel. I'm sure you've heard me talk about the tracker. This is my baby. This is the thing I created at the end of 2023, launched it in January of 2024. And the idea with this tracker was to solve one big problem that really annoyed me. Is that I wanted information that I could find on the ETF issuer website and merge that with information that you would see on a place like Seeking Alpha or Google Finance or Yahoo Finance, all in one location. And not just that, but also be able to filter through all the various sectors and the funds and based on performance. And I just wanted to be able to filter through it instead of having a million tabs open and every so often have to create new spreadsheets to try to make this happen. This is an easy one-stop shop, convenient, where once you actually get a hang of it, it is a really powerful tool. So much so that even there's been times where I've bugged the various fund managers and have given them specific stats of what I've pulled off the track, and they're like, we didn't even know that was a thing. So the tracker has its merits, it has its place. It might not have a glossy, polished look like a third-party platform out there, but it gets the job done, and that's what I'm here to show you with the tracker. So let's just talk about the tabs for a moment here. It has a Canadian tab where you can find roughly 240 cover call ETFs. There's an American tab where you can find around 101 funds. There's a resource tab with educational videos, roughly 2 minutes long, on how to actually use the tracker. There's referral links. There's other tools in here that you can use for your tax research, other portfolio tools as well, so you can explore those for yourself. If you want to follow my portfolio, it's here as well. There's all kinds of great data that you can find in here. If you want to know how much distributions I'm going to make in, say, October, one thing, this is what makes it powerful, being able to highlight over a bunch of cells and then heading down to the bottom right hand corner. Hopefully you can see it. You can see that I'm making, I'll make $7,157 going into October. Now, of course, you have to click on this if you want to change it. Maybe you want an average. You want to see, say, maybe average performance, or you want the total. So that's what sum is here. But just remember, click on the little arrow if you need to change, to see all the different data sets in here. So that's one powerful thing about it. And of course, all the various yields, but it's very transparent for you guys as well. Here's all my trades, buys, sells, contributions, dividends. It's all in here. What platform I use, how many shares I bought, how much money I spent or got or whatever. Anyway, that's all there. Again, transparency, so you all can see it. I just get all this info off of passive.com, and then I export it into here so you all can see it, but I update it again once a month. That's the big thing. You will get this on the first of every month if you sign up for it. So this tracker has some live data. It has a lot of static data that doesn't change, but things like yields, forward-looking yields, these do change when the market is open. You'll see these bounce around along with current price. Basically, everything in this area is live for the most part. For the most part, all of this is live, but which is new to this month, I've also added in a column that tells you if it has live data or if it doesn't. But once again, sign up for the tracker. $50 gets you, if you sign up for it right now, it gets you 18 months worth of trackers. That's like the equivalent of it's cheaper than getting a tall coffee at Starbucks once a month. I mean, if you're hungry for knowledge and you want to learn more about cover call ETFs, this is going to be a good spot for you. I'm telling you, I back this thing fully. I know I get it. I have a bias to it because I created it. But again, this is all data you are going to find with Yahoo Finance, Seeking Alpha. But then there's going to be a section here that you would find on the fund manager websites. So things like fees, payout frequencies, MERs, right, which would be total expenses to operate the fund. Maybe it's like the cost of leverage and to pay the managers and the marketing costs, sometimes the trading costs, but sometimes those are separate. You can see those in the ETF fact sheets on the fund manager websites. Things like moneyness and portfolio coverage. This will give you a good idea of just how aggressive something is. Is it 100% portfolio coverage at the money? That's usually pretty aggressive versus, say, up to 50% coverage out of the money. Certainly a lot more conservative. But these are things, even if you don't really understand what I'm talking about, this is the language you're going to start picking up with the more videos you watch, podcasts you listen to. Well, I would say books you read, but honestly, all the stuff I've learned about cover call ETFs has been like YouTube and the various articles I've seen online for it. But I think as time goes on, right, I'm sure we'll see books on it, right? AUM, some of this is live, so you can actually see the AUM change on a daily basis. And then, of course, we have distribution history over here. We can check out monthly changes, what has changed this month. Like this to get this info right here would take you forever if you were that curious about it. There is, not that I know of, I don't know where you would go to find out what are some of the biggest changes month over month in distributions, and to get a good idea of like, okay, what is, like, what's normal? Like, is it normal for funds to be bouncing around or normal to be stable? You get a great bird's eye overview of this, okay? And when you access the tracker, all you need to do to set up these filters, very easy. You just click on whatever that is, row 2, you go up to data and you'd create a filter view. You just click on that and then you'd get you would be able to filter that out. But again, to see that, that's also a video in the resource tab as well. So I don't know where else you would be able to find information like this, like lifetime change you can filter through. And again, this is on the Canadian side. So the biggest grower this month has been this leadership fund. So good stuff there. And honestly, it's very stable here in Canada. A lot of the fund managers just prioritize stability in their distributions. Honestly, this is a pretty tame month overall. You'll see Hamilton typically a little bit at the bottom. You'll see them at the top. Their maximizer suite typically they're stable, but they do fluctuate a little bit, so they're stable-ish. So let's just put it that way. And then, of course, we can always look at the lifetime changes, see what's going on there. And for the most part, you see, significant growth across the whole cover call ETF landscape. Now, one other thing that you can do is just also look at the performance data. If you're wondering what P means or TR means, if you see these little black spots in the corner, just hover over that and that'll basically just tell you what something is. It'll give you a description. So in this case, TR means total return, price performance, and dividends included. PP is just price performance. So one thing I like to do is just check out price performance of something. Now, because I'm fetching my data through Google, not every fund, unfortunately, to date is able to fetch healthy data. So that's why you'll see sometimes, live data. No, we're not getting great data from some of these funds. So unfortunately, C Day, S Day, Q Day, not responding correctly. But there's the vast majority, 95% of the time, it can get you that data that you're looking for. This one actually kind of surprised me. HBTE, you might think that like the cells are off or the formulas are out or it's not fetching properly. It's like that fund actually, that's correct. That's how much this has gained year to date. So if you've been invested in HBTE, you have totally experienced an awesome bull run with these Bitcoin miners, Bitcoin technology companies. The weird part is like you might look at that. I look at that because I stare at this tracker a lot. Bitcoin has not experienced the same kind of bull run that these companies that have something to do with Bitcoin have. They've all experienced a tremendous bull run this year, whereas Bitcoin in of itself has sort of hovered in that box of 122 on the high end, to 110, 112 on the low end over the last 4 months, 5 months roughly, I want to say. I believe it's still grown this year ever since the beginning of the year. What did it start the year with? Like 94,000 or something? Anyway, it was something like that, I believe. So there's still growth, still beating all the indexes, but the last few months it just hasn't experienced the same bull run like these other funds, like these other underlying companies have. So once again, and here's the fun part. One thing you could do is if you're curious, what is the average price performance across all 240 funds? Well, you can highlight the whole row. And what's the average? Equal weight. The average return, price performance return of all these cover call funds on the Canadian side, all Canadian fund managers, 7.63%. So, right, no matter what, there's going to be people out there that just figure that, right, these funds, all they do is crash down into oblivion no matter what. Again, it has to do with the structure of the fund. When you understand how these funds are structured, you come to realize that this notion that cover call funds at wholesale just go down. They don't. Some funds are much more aggressive. Some have more of their total return wrapped up in the income. Some are a lot more balanced where, yes, income is still the priority, maybe 75% income, 25% price performance. It's a range, but it takes the research. It takes, having a bit of a curious mind and looking at the data. Once again, this is going to give you the data, bird's eye overview. Okay, so that's price performance. Let's go total return year to date for all these Canadian funds. I apologize for the quick whiplashing from up to down, but I really just want to make a point. I don't want to scroll too slowly here. So average total return year to date of these cover call funds, 15.46% across all of the Canadian fund managers at the moment. So again, that's total return. That's beating out, what is that? Is that beating out the S&P 500 year to date off the top of my head? I'm not sure, but again, we can find that out. We can actually look for them. So we have the indexes here. Let's see, then the TSX 60, Canada's S&P 500, roughly 23%. And what is the S&P at right now? Total return 14.89. So indeed, total return, the average across the entire cover call ETF landscape here in Canada is indeed beating the S&P 500 total return. Pretty incredible. But again, that's just one of the powers that you get with the tracker like this. Okay, so we've basically looked at everything on this page. Let's move ahead. The US side of things, actually way cleaner. It does a way better job at fetching data, mainly because a lot of the trading volumes are a lot higher. It's a bigger market. These would be a lot of all of the fund managers here, they're all American. Different landscape though, and you can see it in let's just try price performance. Whereas on the Canadian side, what was it, 7.63% across 101 funds. On the American side, what do we got here? We got negative 10.63% if it was equal weight. Quite the difference there, but let's see if it can make up for total return. Let's just give it a shot. Total return, 9.31%. Honestly, guys, I didn't even look up this info before I did this video, but as I started rolling with it, I thought, actually, this might be kind of fun to look at the comparison between price performance on the American side versus price performance on the Canadian side. Just another example of the kind of a powerful tool this thing can give you. And trust me, I do plan to do more stuff with this in the future, especially heading into next year. Baby's coming. Many of you know that. Fourth baby on the way. Super healthy so far. Everything's all good. And I'm going to be taking at least 18 months off from work. So that means I can spend more time with you guys and do more stuff, especially with the tracker. Okay. So, yeah, that's pretty interesting. I feel like I need to comment on that more. On the Canadian side, there's much more of an emphasis on that balance. Again, income products are meant to prioritize income. First and foremost, let's not get that confused. The priority is income. Secondly, is going to be things like, it will be like the price performance, let's just say. Okay? So, but there's just more of a priority to include in the total return more of a balance of the price performance. It's not equal. It's more like income versus price performance over here. Whereas on the American side, it's much like that gap is much bigger. So honestly, I feel like a lot of the American fund managers I don't know what's up, but I feel like they could learn so much from the Canadian fund managers who I feel like have really dialed in one, stability, two, the leverage component, and stable distributions. They're very popular. They're going to be popular with people who just want a conservative strategy. They're not necessarily looking for these giant like 80% yields that you see with Yieldmax. Yeah, it has its place. It does. It's a strategy for somebody. But I think there's plenty of people I've met with, talked to, that on the Canadian side of things are just very happy with that stability, modest leverage, and being able to see green, not just in the total return, but also in the price performance. It's a psychological effect. And especially when you want flexibility, it's kind of nice to see price performance increase and sell it off, make a little bit of money there, put that unrealized capital to use somewhere else. Okay, so let's move along to the distribution tracker tab. And once again, one thing I really like about this is you can scroll through and just see the history of a lot of these funds. And they're all color-coded, so you kind of know right away. Maybe what we'll do is we will, to make this a little bit easier on the eyes, let's look at a sector like, I don't know, let's do one of my favorites. Let's do utilities. One thing I like about, say, looking at a sector is that you can easily tell if a fund with its distributions, whether it's in the distribution tracker or the volume tracker or the AUM tracker, it's all color coded. So right away you can tell if a fund is suffering, or if there's a decline in distribution, or if there's a decline in the AUM. The red color is going to be an easy eye catcher for you guys, whether something is healthy or not. You're going to investigate it a little bit further. If it wasn't for that, this would be a lot harder on the eyes. Now, some of them don't change. It's just 0% month over month. But the other ones do have those declines like you see here. But once again, CI, they're variable distributions. Basically, the only major variable distribution fund manager that we have in Canada, and also pays quarterly. Whereas everything else is pretty stable overall. Some minor months where it's down, but nothing too drastic. Maybe another good one to look at would be something like technology. It's going to be wide ranging, but at least here you'll be able to see much more. You get more of an idea of whether something is growing or whether something is declining. Technically, you just see that a lot more with technology. as the price appreciates or declines a lot harder faster. If it increases a lot, typically, as long as volatility is keeping up, you'll see natural distribution increases. So again, you can use that as you may to filter through. Maybe you want, the average change. You're very curious to know the average change of the sector. What is the average change across all the technology cover call ETFs out there? And this month it's down 8.93%. But once again, that includes the American stuff, which is super variable and it whipsaws back and forth. Another fun one I like is just tracking yields. What have yields been like over the history of this tracker? And I mean, let's go to maybe a fund like, an old time community favorite. Let's go just check out HYLD. What has HYLD been up to in its history since January 2024? Started January 2024 with 11.725% yield. It's at 11.72% yield. And it's reached, I'm curious to actually know what's the highest yield it's ever reached. I've seen 13.10, but has it ever reached 14 or 15%? I don't think 15. I don't think so. But you can see in May of 2025, it actually hit 14.14%, which is a great yield for that fund. It tremendous, like getting in May around that time. You were very fortunate enough to get it, but it kind of reverts back to the mean above 12%, between 12 and 13% for HYLD. But once again, you get the idea. You can scope out the various histories. AUM, once again, I like to talk about AUM and also who else is tracking AUM of these funds. Once again, it's a color coding, which is a good indicator whether a fund is healthy and it's growing. Maybe in this case, as an example, we can maybe look at, let's see. Let's maybe just look at Yieldmax. We're looking at sector. Let's go to fund manager and let's look at Yieldmax. And let's see how these funds are doing. So we can see just across the top here, a lot of growth for Yieldmax. Other than when people want to be risk off, like we see with the Liberation Day stuff. There's definitely a risk off mentality going on here, rotating into other things. Even though Liberation Day happened in like April, so. This would have been, the rate here would have been before Liberation Day, but anyway, you kind of get the idea of that. Check out that history for yourself. I think, again, I'm not going to look at the average volume. This is just, what is the volume that it trades at? Not much to see there. Distribution history is basically the distribution tracker without the month-over-month changes in it as a percentage. One of my other favorite parts, if you're really wanting to see what taxes are like, I offer up a few tabs of taxes, number values, but also percentage values. The percentage values I probably look at the most. You can filter through, what is ROC, return of capital. This could be a tab that you could really build out a tax strategy around or something of the like. You can even compare it 2023 to 2024. What were the changes in what was eligible dividends in 2023 versus in 2024, and what were the increases? I mean, granted, some funds start their inception dates in the middle of the year, so they only have 6 months to complete a calendar year. Then 2024 comes along, they're able to complete a full year. So some of it is just that, like if you're like, why did it only pay so little in 2023, but in 2024 it pays more? Well, it depends when its inception date was. But at least you have a comparison, and you get those percentage changes as well. But for the most part, for me, I find I'm always looking at the 2024 taxes, filtering through by return of capital right there. So And then that gives me a good idea of, okay, could be a potentially really tax efficient fund. Now, once again, return of capital is just delayed. It's delayed capital gains. Whether you hold the fund for life, eventually your ACB will run down. Understand that language might be, it might be just jargon for people who are new, but maybe if you hear it from someone else, do a little bit of research, you pick up on it a little bit more. But the idea is with return of capital, eventually you're going to pay capital gains on it. Whether you sell the fund, it just has to do with your ACB adjusted cost base running down. Whether you hold it for life, you'll eventually pay it. So again, delayed capital gains there. But in the meantime, still a tax efficient way of holding a fund. And for the most part, a lot of these funds are pretty heavy in return of capital. If you are a high income earner, your next best friend is going to be capital gains. If you're rock with a low income, then like eligible dividends is going to be more of your friend. Your non-friend, your absolute worst enemy when it comes to taxes is going to be things like foreign income, which gets taxed at your marginal tax rate. So it's almost like just going to work, earning your income at work. But these other categories much more tax efficient and really helpful. Again, tax planning, using whatever tax software. You can input some numbers. I like to use the Wealthsimple tax calculator, very simple to use, and it can kind of give you an idea of roughly what you'll pay. It's not an exact science, but it can give you a rough idea of what to expect if you're building out a portfolio. Speaking of which, before we end this video, let's just do that. Let's build a portfolio. How would any one person do that? Well, I'm going to reset everything. Usually I like to reset it by filtering the ticker and the fund manager. So ticker first and then fund manager to get it back to factory settings. At this point, let's just build a portfolio that let's maybe build my TFSA, or actually no, my margin, my non-registered margin account. Let's just do that. Let's just keep it simple. I'll just clear up. I'll do ETFS. I'll do bank, which I own. I'll do ENCL, and I'll do Utes. And then we can take a look at that. And then, so this is the 4 funds that I own in my non-registered margin account. But let's just say that you don't own these funds. Well, at least you can kind of put it together. You can try out price performance. What's the average price performance of this portfolio year to date? 6.25%. Total return year to date, 17.33%. That's beating the S&P 500. Maybe you want to include that as well. Well, let's include that into let's see, SPY. No. What we'll have to do is basically clear up everything. Select. We'll go back. Then we'll add in all the various indexes. And then we'll add in those funds that I was just talking about. So ENCL, Utes, and what, bank? Yeah. So that's what we want to do. So now you have all the various indexes in there. Total return. Now we can actually see for ourselves. Price performance. 6.25%. How does that stack up against the others? On a price performance level, it's the weakest performer. This portfolio on simply price alone is the worst performer. But as you are coming to learn, if you're newer, if you're seasoned at this, you understand that total return is what is key to unlocking the full performance data. So we go over here, highlight those 4 funds. We get 17.33%. What indexes is it beating out? It's beating out the Dow Jones. It's beating out the Russell. It's beating out the S&P 500. Not beating out the NASDAQ and not beating out, surprisingly, the TSX 60. Doing absolutely really well this year. But of course, some of these sector funds, they're all Canadian. They're all participating to some extent in the huge performance that we're seeing from the TSX 60. So again, this is such an easy way to build out these mock portfolios. I know you can't apply weights to it, unfortunately. That's not something I've figured out yet. But if you want sort of a general understanding of how to build something like this out, this is a great tool to do that. So hopefully you all take advantage of this and get into the tracker for yourself. Once again, you can get, if you get the tracker now, 18 trackers until March of 2027 for $50. Hopefully you take advantage of that. It's a great tool to use. So until the next time, everybody, hit all the buttons of like and subscribe variety, and I'll see you all in the next video.